everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those of us who are here for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. So part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, we wanted to share with you some of the notable token price moves and what we think drove them. So before we get started, just a reminder, this is commentary. It's not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Wow, guys, it has been a roller coaster of a week so far. If you're keeping track, and it's only Wednesday. So to start, we have Glimmer, basically the token for Moonbeam. So Glimmer is, so just to let you guys know, so early this week, or I think it was on Monday, the Nomad bridge was exploited for about 150 million in what appears to have been a fairly unsophisticated hack. So the Nomad bridge is basically what connects Ethereum to Moonbeam. And Moonbeam is a project built on the Polkadot network. Their token is called Glimmer. So basically the Nomad bridge used what's known as like a peg mechanism. So for people who aren't as familiar with like bridges between different layer 1 blockchains. So for the most part, layer 1 blockchains can't communicate with each other, and so you can't send assets back and forth. Now that we've gotten to a stage where there are so many more layer 1 blockchains out there, you need bridges to connect one L1 to another and move assets over. So Moonbeam is kind of, an up and coming project, or Polkadot's kind of a new burgeoning ecosystem right now. They aren't, they don't have a ton of different bridges and infrastructure. Nomad was the main bridge between the two. And the bridging technology that Nomad adopted is one used like fairly commonly across different bridges. And it's the idea that you basically peg assets on each side. So if I'm sending $10 of Ethereum from Ethereum over to Moonbeam, it's not my actual Ethereum that's getting moved over. It's basically an IOU. And then my Ethereum is kept on one side of the bridge in a bridge contract. And when I bring back over my Ethereum from Moonbeam, I basically redeem that IOU for the physical Ethereum. So what happened is that this hacker essentially was able to drain the smart contract funds that were sitting on the Ethereum side. And so all the IOUs on the Moonbeam side were unable to redeem. So all the funds, unfortunately, are now gone from the bridge, which means that all the assets basically went to zero on Moonbeam because there is no backing or no peg. So basically the initial attack wasn't that sophisticated, as I mentioned. This attacker ended up just draining funds through like a loophole in the code base. And basically, as other people online saw this loophole, they also began draining funds from the smart contract. And it was crazy because it was over within like an hour or two. And normally something like this would have taken a lot longer, just because people were kind of curious, and they were like, oh, well, if I just take this string and put it in this transaction, it drains funds from this person's wallet. So that's essentially what happened. There is still not a lot of information out there on like what's going to be done, what's going to happen to Nomad, and to Moonbeam. So initially, when the news came out on this, the gains that Moonbeam made in the last several days were wiped out. So it only ends the week up 4.5%. Okay, next up we have AAVE. So AAVE is a borrow-lend protocol, and this week it voted through a proposal to establish GHO, which is a stablecoin which will be native to the AAVE protocol. So GHO will be pegged to the USD and backed by a basket of cryptocurrencies that users deposit on the platform. If users choose to borrow GHO from the AAVE protocol, the AAVE DAO will earn interest payments on these loans, creating another business line for AAVE. So this is important because although AAVE TVL is the third largest in the industry at just over 6 billion, it actually has very little revenue, and the token actually trades at about 250 times price to earnings, sorry. And so what that really means is like there's not a lot of like value accretion to the DAO for any of the revenue that's generated, because most of the revenue is given back to lenders. So we really, we're hoping the introduction of GHO will hopefully increase revenue to the DAO. AAVE initially traded up 11% on the news and is up 8.9% for the week. All right, next up we have Chiliz, or CHC. So the Chiliz is a sports and entertainment crypto project. They announced this week that they're investing $100 million into Arca Studios, the digital content creation arm of FC Barca, basically, or the big football club in Barcelona. I hope everyone knows what this is. The investment basically buys Chile's 24.5% ownership, and they're going to be developing Barca's Web3 initiatives through this entity, such as its NFT and metaverse strategy. So FC Barca has been partnered with Chili's for over 2 years, starting with the launch of their token, their fan token, BAR, back in 2020. The BAR token currently has a $16 million market cap and trades at about $18 million volume a day. Chili's jumped initially 18% on the announcement and is up 27% for the week. And last up this week, I give you Ethereum Classic. All right, so history lesson, if you guys are not familiar with crypto history, there is an Ethereum Classic blockchain. Ethereum Classic was created. It is actually the original Ethereum blockchain, but Ethereum forked away from it after a hack in 2016 called the DAO hack. So again, for those who aren't familiar with the kind of very OG crypto history, back in 2016, a project launched on Ethereum. Ethereum had only been running for just over a year, so it was very new and experimental at the time. And they basically wanted to be an investment DAO, and they raised money into it. And so basically everyone who wanted to buy DAO tokens had to contribute Ethereum to this on-chain venture fund. And they ended up raising, I can't quite remember now, but it was it was, I want to say it was almost $100 million. But it was quite a lot of money at the time. And it was all in Ethereum funds that were on chain. Somebody managed to find an exploit in the DAO contract and started draining funds from the contract. As a result, the Ethereum devs at the time actually worked really hard to try to patch the vulnerability. They tried to do a lot of different things, and they finally came to the conclusion that the best thing they could do was actually fork the blockchain so they could reverse or patch the hack and basically return all the funds to the initial users without having so much value leave Ethereum, because that money would have just been gone forever. At the time, it was like 5% of like the circulating supply of Ethereum. And so they really deemed that was like too much to let go to a hack. Initially, they assumed that the forked blockchain that was left would just die because none of the miners on the network would support it. And in fact, what happened is that a small cohort decided, no, we're going to support this blockchain. And a lot of people started to say this is the true blockchain because blockchain should be immutable and you shouldn't necessarily fork it to change, hacks and things that go wrong. Obviously, there's a lot of, kind of theory up for debate there on like what they should have done, what they shouldn't have done. Obviously, everybody has their different beliefs on how blockchain should be run, but this is what happened. So we ended up with the Ethereum Classic blockchain. So anyway, that was the backstory. But Ethereum Classic has been making gains the last few weeks, and I can tell you right now, Ethereum Classic has not been in the news, not been doing a lot. And it's basically, a lot of people are speculating that as Ethereum, the regular Ethereum, moves to ETH 2.0 in the merge in the next few weeks, that miners who are not going to become validators on the network, they're actually going to turn their machines on to the Ethereum Classic network. So this was compounded especially last week when Antpool, which is the largest Ethereum mining pool, announced a $10 million investment to support the Ethereum Classic ecosystem. So currently, miners on Ethereum use GPU mining machines, and therefore, in order to continue generating profits, they must switch to proof of work network. And that one of them is Ethereum Classic. So we're watching this. It's interesting to see. Antpool is the largest pool so far to confirm that they'll make the switch, but the hash rate, which is the measure of mining power on the network on Ethereum Classic, has actually been on the rise since mid-July, which indicates that, more people than just Antpool have already begun the switch to Ethereum Classic. While we don't believe that this will be a long-term gain or that Ethereum Classic will see a lot of adoption, this has been a very interesting event to watch. And Ethereum Classic just this week is up 23%, and I believe up over 100% in the last 30 days. All right, guys, that's all I have for you this week. I'll be sure to touch on Solana next week, as I know that the news has been floating the last 24 hours about the hack on their potential wallet. And there's a lot of uncertainty right now, which is why I didn't talk to you about it today. So tune in again next week at 4 p.m. Eastern to hear what's driving token prices.